Great. Hi, everyone. I'm Matt Propst with Kamiwaza. Kamiwaza is a platform for distributed AI inference, hardware agnostic. We love GPUs. We love CPUs. I'll let Oliver introduce himself.
Everybody, good afternoon. I'm Oliver Bevan. I'm a partner at McKinsey in Chicago. I lead both some of our work in supporting our clients and implementing AI, and then also some of the work we do internally, thinking about how we do client development and then also responsible AI. My background was primarily in financial services. I grew up doing non-financial risk, shifted into privacy, and led our research on some of the implications of AI and risk management as well. So, by the way, I'm probably not going to talk about specific named client examples for fairly obvious confidentiality reasons, and I'm well aware that what I say today may be outmoded tomorrow, so forgive me if you wake up tomorrow and a lot of this is completely broken apart by new technology.
Appreciate client confidentiality. Um, I have a great appreciation for Quanta Black at McKinsey. I spent 2 years at Quanta Black and 2 years at McKinsey. And so I'm going to try to ask a few driving questions of Oliver. So first, let's set the stage of why AI. And I think McKinsey and especially Oliver have some good knowledge about how AI can be used within financial institutions, fintech, not just incremental changes, but significant business transformations using AI. So what are your thoughts? And I know you mentioned you can't give specific names, but maybe some generic examples that you've seen time and time again across financial institutions.
Yeah, look, I think some of the previous panelists have touched on this, so I'll probably repeat some of what you've already heard. I think some of the most foundational use cases that we see of AI where it's actually driving disproportionate amount of value is previously heavily manual processes where you had to drag data across multiple parts of the organization and think about how do you standardize it. So we see that in things like commercial real estate reporting, where you have to think about all the different inputs that drive analysis of transactions. We see it in KYC AML, where you have obviously standardized ways that the regulators want to approach it, but it's very complicated to draw both external and internal sources to think about the analysis. And then we've already heard on the sort of the amazing gains in trading from the panel before in terms of how you think about implementation of AI for recommendation of strategies, albeit not fully agentified yet.
Yeah. So some of these things you mentioned KYCA. Previous to AI, this was a very cost-intensive process, right? A lot of humans. Um, and so how has AI really driven that? And what have you seen over the last 2 years, KYCA specifically?
Yeah, I think we're still relatively early in seeing the full potential of AI in this space. I think ultimately what we're seeing our clients start to experiment with is agents and sort of agentic models of pulling together reports from different parts of the organization, pulling on it on external sources as well, and then you obviously have a governance agent that sits on top and evaluates the quality of the underlying draft of the report. I think where we have been as AI has really come on is the ability to do simple RAG in terms of you have a standardized query that you're making on a database. The AI can pull out the relevant insights and provide sources that helps the investigator with the initial drafts of the reports. So that's saving hundreds, if not thousands, of hours across institutions. I agree with the panel previously that we're still yet to see full full implementation from a cost. But the curve is clearly there in terms of where the organizations are going and where they want to go.
When you come into a financial institution, do a readiness assessment. What are the typical 3 to 4 key gaps that you see over and over again, or consistent gaps that you see across different institutions in being able to adopt AI? And how do those gaps differ between traditional fintech companies, traditional financial institutions versus fintech?
I mean, for disclosure, I think we may have a slight difference of opinion given what your organization does. So it'd be interesting to explore that. But I think that, look, again, I feel like I'm just parroting some of what we've just heard, but definitely data quality. And not just in terms of the fragmentation of data, but also the nervousness that creates in the executives about their readiness to implement AI. They are very concerned about not seeing returns on use cases because they're so worried about the underlying data quality, regardless of whether that's true in fact. So understanding data availability and fidelity is incredibly important for us. I think secondly is understanding what use cases or what domains of use cases are likely to provide real value. There's a lot that we now have hundreds of use cases that any institution can adopt. Understanding how do you fit that in with the core business strategy of what the financial institution does. That can be easier with fintechs than with larger banks because larger banks, there's a lot of fighting about who's going to get AI funding and prioritization, and so that can cause a lot of dissent at the senior levels. I think third is technical talent, so understanding what do they have in terms of the core engineering and data scientist versus what they may need. So it's a capability assessment in terms of their ability to deliver. And then honestly, it's like a current state assessment. That's probably what I should have said first, but have you got experience in implementing AI already? Where are you on the journey? Where are you in terms of the leadership embrace of potential AI? Some organizations are very early stages, and so the 90-day readiness assessment is a disproportionate amount painting the art of the possible as opposed to technical discussions around feasibility.
How is AI, generative AI specifically, helping with the capabilities? You mentioned there about availability of data scientists. And of course, you also mentioned data quality, data engineering.
Yep.
And clearly we know that there's a lot of generative AI being used in those areas. Do you see adoption of that yet? And what does it look like?
Mixed. I think uneven. I think there's still a sense, and look, I think we've had two institutions where this may not be true on the panel before, but across many of our clients, there's still a sense that the binding constraint in their ability to execute is data scientists and data engineering. And until they have those in place, they're quite nervous about significantly scaling Gen AI. I think the places that are more advanced are shifting to a world where data scientists are, I wouldn't say they're trying to enable a far broader portion of the population to become data scientists, but certainly at least make people aware of what the potential of Gen AI is to do basic analytical tasks that can then significantly accelerate decision making. So I think that's where institutions are going. It's true in marketing, it's true in risk management as well. And I think they're trying to relax the constraint of a relatively constrained set of very technically talented people as the means of it.
We see a significant influx of Gen AI in every technology company out there. And a lot of technology companies have been laying people off because it's sort of the haves and have-nots. So I assume that the same thing has been happening with data science and data engineering in terms of acting as a force multiplier, in terms of being able to create code, clean code, code that has proper test cases, etc., and meets the unit tests, etc.
Yeah, and look, I'm sure you all follow the benchmarks as I do. Like the advances in even the past few months in terms of code quality and the need for review is quite staggering. I don't think I would have had as much confidence if we'd been talking earlier in the summer as I do now in terms of replacement. And look, I would be remiss in saying it's also a big question for us, consulting business model in terms of what the future of consulting is as we think about client service too. So there's also the service provider around the financial institutions as well, and how they shift and how financial institutions are clear about what they need in terms of this.
You've written about and talked about rapid experimentation and iteration. And sometimes we think of that as being the antithesis of financial institutions. But what do you think about rapid experimentation, iteration, when infrastructure comes involved, which typically we don't think is being rapid?
Yeah, I think it's a great question. I think historically people have tried to make very careful big bets when it comes to infrastructure because of the cost of reversing it. I think with the emergence of technologies and again we heard a little bit about this in the preceding panel in terms of the flexibility of core infrastructure. I think there is much more potential to run experiments, to run parallel, launchable sort of processes to understand what at your institution and avoid sort of lock-in for long contracts. I think that's really where we're trying to guide our clients, is avoiding that. And one reflection I've had is if we think about the GRC systems, the governance, risk and compliance systems, so the core risk management, a lot of those have multi-year sort of contractual relationships. It takes a year to onboard the systems, then all your risk reporting flows through GRC, and it's incredibly hard to move off those. And I think trying to make sure that our clients don't fall into trap when it comes to infrastructure is an important part of discussions we're having. Don't know if we've fully got the answer yet.
Yeah, we've talked a lot today about infrastructure and where infrastructure will go. Where do you see AI infrastructure in 5 or 10 years? Versus on-prem, cloud?
5 years is a long time. I think I suspect there's going to be a bit of a split in terms of size of financial institutions. And we all know that there's consolidation in industry that's been happening recently. I still think that for decent set of the smaller institutions or monoline institutions, they may push for the classic cloud migration, and they may be better off running in cloud. I think for the more sophisticated or larger institutions, they will want to pull kind of the core infrastructure closer. The on-prem discussion we've just had, because it gives so much more flexibility. They have much more control over IP and the latency. Driving down latency, I think it's just going to be so critical for them. So I think that there is going to be a split into the business model and size of institution. Where it's going to be in 10 years, quantum computing is a reality. We might be having a completely different conversation. I don't know if I have a sense in 10 years. Other than that, I think there will be increasing infrastructural flexibility and a willingness to run multiple institutions, which is going to multiple infrastructure settings, which I think is going to create some tensions in the cost base, and that's going to be what drives tough decisions at senior levels.
Yeah. Specifically for risk management and fraud detection, how critical is it to have infrastructure that can scale on demand during market volatility and crisis situations? And then I want to add to that, what specifically challenges are there to agentic AI?
But I think that's a leading the witness question. Very important. I mean, you can't run the same sort of baseline demands across, trading versus non-trading hours. You also have spikes of fraud around specific events. You have event-based driven fraud where you're obviously going to need to have disproportionate amount of resources attached to it. I think in terms of what does that mean for teams? I mean, obviously in terms of how you think about allocation of compute across parts of risk management, that does mean that you need to have fairly fine-tuned ability to reallocate, and especially in response, it's not just that you can predict when you're likely to have spikes in fraud. You often will see signals or emerging new trends in fraud that you need to respond and think about reallocation. I think the Gen AI piece is interesting, both because it is changing how you can think about fraud investigations, some of the insider threat dynamics in terms of there was some really interesting stuff that was coming out 2017, 2018 with Behaviox and looking at kind of trader behavior and some of the signals for when you're likely to have rogue trader events, just based on the networks the trader has, the types of chats they're having, interactions, if they suddenly start to contact new parts of the organization. You can also track if they've had a divorce or some personal event that makes them more likely to need money. So scaling that through agentic, I think, is a very useful defense for the clients that we serve. The flip side is agentic is also making increasing sophistication of fraud attacks, and so it's a bit of an arms race. And you know more about this in the CISO suite. It's a bit of an arms race in terms of can you keep up with the way that the bad guys are using agentic to attack your institution relative to how you were using agentic to defend against those attacks.
Very true. I mean, when you be thinking about what are the attacks in the future, because we can't be designing our AI systems to counter the traditional attacks, right? The attacks are changing continuously. It is literally robot against robot, AI against AI, and as we know, the majority of phishing attacks nowadays are AI driven, and so all of our security controls are affected.
Yeah, I mean, you said it's you're still using voice control or basic verification methods. Some massive.
You've written about, let's go back to the specific implementation. You've written about a 90-day risk and readiness sprint before scaling Gen AI. What should that sprint produce, and how does that output of that sprint guide the first tranche of infrastructure capacity?
Well, on the readiness, it's a little bit of what we've already talked about in terms of data availability and readiness. Ideally, we want to have a sense of what the wireframe of the use cases is, so we understand how do you actually scale this. We certainly want to assess the change management dynamics in an organization in terms of willingness to adopt, and then we also want to understand what metrics can we track. To the discussion earlier, there's variation in terms of industry adoption of metrics, but you need to have what are you trying to assess in that use case? What's the desired outcome? And then from the risk side, a little bit of light red teaming. It can vary a bit by use case, but certainly an initial assessment of what are the primary ways to that the model could go haywire, assuming we're implementing things. And then also just how are we thinking about user guidelines, even for the pilot group. What is the, for a chatbot, what are the prompt instructions? How are we helping people get the most out of this for different kind of agentic models? It's how do we want them to engage with the agents? How do they understand the structure of agents? And how should they be evaluating agent performance in the same way, but analogous to you'd expect someone to evaluate team member performance. We need to train people also to understand.
How much of this is not initial training, but more retraining? Because presumably every company out there is using AI, whether they know it or not. And the employees are consuming it on the side, their personal accounts, the dark IT, etc. So how much do you run into this that it's sort of an eye opener to the employees as you do this training?
I think you're right. It's why the initial policies in 2023 of don't use any other chatbots other than the ones we've approved internally were a complete failure because people would just go and use ChatGPT regardless of what companies told them. And that's kind of what you want, right? You want people experimenting. You want people to learn how to use it. I think the challenges are effective engagement is actually more technical than people think. Like a lot of people think you can just throw any question or any kind of interaction and you'll get an optimal result. And so understanding how do you progress in terms of your learning of how to engage with the technology is quite important. I think the second thing is cultural, which is unlike in Excel, you can't just say the machine told me this and therefore it's the right answer. I mean, you should do that with an Excel to be clear, but like it's even more problematic to do that with agentic systems. And so making sure that they understand that they have ultimate accountability for outputs and that they can't just rely on the interaction with the machine as an answer is a big shift for most people who are not used to thinking about that. And then I think there's also just the empathy dynamic of how do you engage with these things so you don't get too attached to them. How do you use them for their intended purpose and then maintain human relationships with colleagues as opposed to just that's also a thing that we're seeing emerge in the culture of organizations that we're trying to counteract.
You co-authored the Global Cooperation Barometer for its post-2020 headwinds in tech flows and rising restrictions. It was very interesting to see post-2020 the decrease in cooperation. Obviously, in the last 8 months, that has changed somewhat. We'd like to get your perspective on how that's changed and how is that influencing what we might call multi-jurisdiction AI and how AI should be implemented for any company out there.
Want to take an example of where I've been wrong? That's probably a good one. I think so what we found in the last barometer was there were patterns of increasing cooperation, particularly in terms of some of the trade flows, and starting to see a reversion of some of the relationships pre-pandemic. So if you look at migration of international students, if you look at ability to absorb, increasing spend on sort of aid, that stuff was starting to come back. Obviously, that's no longer the case. And we'd highlighted increasing complexity of AI regulation as one risk coming out of the last report. I think that's clearly the case now, and you have, to your point, completely different philosophies of how to regulate AI from Europe, which is my home, and I think it's taken in some ways quite an adversarial approach to regulating AI, grounded, I think, in a lot of the work that they've done in GDPR, linked to privacy dynamics. Obviously, you have the Chinese thinking about AI with how they want to engage with their homegrown models versus foreign models, and then the US, which there's even, as we were talking about, this significant disparity between what's happening at the federal level and then what's happening at the state level. And I think that's creating, as ever in financial services, a huge amount of stress in terms of how do you track changes in regulations, how do you think about shifts in control environments to show that you can comply, how do you think about infrastructural decisions so that you have some separation or potentially defense against completely different AI regulation regimes, assuming you're in multiple jurisdictions. So unfortunately, I think the omens for that are not good. I think it's only going to get more complex as people start to figure out legislation and the approach that they want to do.
Sounds like the data silos are increasing, the regulatory silos are increasing, and so it's becoming increasingly challenging for any leader to navigate all of those. So what is the one thing, we're out of time, what is the one thing suggestion you'd give to leaders today to deal with this?
On the regulatory side, or
Yeah,
overall?
regulatory side, yeah.
I think on the regulatory side, there's such a huge volume of regulatory changes that come in. If you look at regulatory change management systems, they're tracking thousands of items a day. I think the question is, that's actually a real opportunity for AI in terms of synthesizing what's happening globally and then the implications for business. And I think just being aware of the balance between the cost of compliance is rising. Do you need to be a global institution, or do you need to be in all the jurisdictions you're in? I think that's a big strategic question for institutions now. And then finally, is just it has to be part of your AI strategy. It's just thinking about the scale and the infrastructure. Are you going to have things that which apply in specific jurisdictions, or are you going to prioritize use cases that are somewhat agnostic of jurisdictions? And how do you think about the return on innovation? I like that phrase that we just heard previously.
It's very insightful. Thank you for your time today, Oliver. It's a pleasure speaking with you.